Morning Call. I'm Mark Gardner. It's the 24th of February, 2026. Uncertainty is the word, basically. Tariff uncertainty, private credit uncertainty, software sector uncertainty drove the market down overnight, particularly the software sector, which is also starting to screw with the private credit sector as well. We've got Oracle down, IBM's down 13%. There was a specific Anthropic threat to that overnight. And then you've got Apple and CrowdStrike. Everything's just been really, really hammered. But there's also supposedly now a threat from Anthropic to MasterCard, Amex, and Visa as well, which next it'll threaten John Deere. Who knows? But it seems to just be going sector by sector, and then just the move starts, and then essentially all of the AI generated research just loops and loops and loops, and then obviously then investors go back and everyone's using AI these days, and then they go and check AI, and then they just get force fed more of the same information. A lot of these companies have very significant moats that are largely impenetrable, and have been for a very long time. And some of the stats around Anthropic, they basically, the claims that they make at this end of the agentic AI are generally unfounded. They've actually not proven most of the agentic side that they claim. They've also just done a cap raise as well. So I think the market's probably getting a little bit carried away. But look, having said that, we're really keen on the sector, particularly in certain software where we believe there is a significant moat. But I'm not catching the falling knife anytime soon. And I probably don't recommend you do anything but probably dollar cost average if you are super keen and you feel like you're going to miss out. But it's not just a falling knife. I think the people buying software on the way down must feel like Wile E. Coyote underneath that anvil that's coming down in the old Roadrunner cartoons. But Eli Lilly had an efficacy for a weight loss drug proven. I'm pretty sure that was not good for Novo Nordisk. I can't see them on the screen there. But yeah, but overall, that software story just continues. I'm sure they'll make up a new sector tomorrow, and then that'll get smashed as well. So because it just seems to be going sector to sector to sector. Blind Freddy could have told you there was software moats. I said this, and strangely enough was laughed at 12 months ago, but I did say moats would be reduced because of the speed and low cost way that people can attack incumbent software. But for those with those regulatory moats, those secure connection moats, where data, like medical particularly, that moat is just, the Anthropic cannot touch it, because a 0.1% error rate is not good enough for these AI things. So no one's writing that software, and if they do, no one's using it or paying for it. So it'll be a very good opportunity, and probably a once in a generation buying opportunity in many of these companies. There will also be a bunch of companies where it will basically spell catastrophe, and they will go out of business. So you need to be very, very clear on what your criteria is when you're buying them. Don't just be buying. I think the ETF in itself is probably the worst way to go about buying this software sector at the moment, because broad exposure is not. You want very laser focused exposure on very, very specific companies with multiple defense moats of defense against Anthropic. But yeah, we've got NVIDIA earnings coming up later in the week as well. I think it'll be Thursday morning. Markets seems to be online and social media convincing itself that no matter what, NVIDIA is going to get sold off. It's probably a little bit early to be calling that. I dare say that'd be the people who are feeling the pain in the software. And just for, disclaimer, we have bought here at MPC, we bought one, maybe two small clips of software on the way down, and we will basically we'll be leaving our final two or three clips to buy, because we've changed our entry methodology in situations like this where we're getting deep value, where we're splitting it into 4 or 5 different clips. And now we'll probably wait for the technicals to start to settle or see some form of stabilisation. But this narrative is not moving as it stands, and it's sort of seen like the S&P was off 1%, the Nasdaq off 1.2, the Russell fell away. That's more about the tariffs, whereas the Nasdaq and the S&P is more about the software. The Aussie market saw most of this yesterday. In fact, it was probably bang on. Maybe so we've actually seen a little bit of a bounce in the SPY futures, and that'll be largely due to these moves, which were also kind of priced in yesterday. Probably gold's up maybe another 1.5%. Silver probably up a couple % more than what was expected yesterday. Copper as well, doing very well to be able to get up 0.5% considering the economic concerns. And then we're still sort of starting to see, lithium higher. Bitcoin got a little bit of a rout yesterday as well. But yeah, we've got earnings obviously today. Now we've got Woodside's probably the biggest one today. Production was a beat. Unit production cost was a beat. NPAT and underlying NPAT were both in line. Free cash flow was a beat, which is always a good thing. And the dividend was in line. And the record production, discipline, cost control in 2025 showed Woodside can deliver strong returns today while investing in the major projects that drive the next phase of growth. And look, credit to the CEO, because this was a hell of a lot lower, and by a few months, last year essentially, and has been in the doldrums for near on 2 years. So it may be worth having a look at. We primarily had our exposure in uranium, but we'll have a bit of a look today. It's not one of our holdings at the moment, but certainly the result looks pretty decent. Private credit jitters, just to give you a bit of context around it, because a lot of people won't understand what necessarily is going on. So a lot of this, the jitters, it's basically due to lenders' exposure to the battered software sector. So, and then liquidity concerns around that. Blue Owl, which is a company that has got a lot of funds but specialises or has a specialist private credit fund. It halted redemptions, which means basically it sent an email to everyone who's invested and said, you cannot get your money out until further notice. That is categorically as JT has joked, the owl in the mine shaft, not the canary in the mine shaft. So we're firmly of the opinion that, that financial journalists have missed a massive opportunity there. But these big Apollo Global Management, KKR shares have slumped 5% and 9%. UBS analysts were estimating private credit defaults could rise over 8% over the next 12 months. So that's in a worst case scenario. So basically that rate's more like 1% or less, and has been for a very long time. So yeah, look, 8% is a lot and would cause a liquidity freeze. So at the moment, credit spreads aren't widening, but that can sometimes be they're not particularly transparent or liquid daily. So that may not necessarily be a firm sign. Tomorrow we've got WiseTech, Fortescue, Woolworths and Flight Centre. Nvidia and Salesforce will be Thursday morning. Salesforce got a couple of upgrades, but I dare say that's from some brokers that are literally drowning in their positions and their recommendations from 40% higher. We do have, basically nearly the whole Fed speaking over the next 24 hours. What do we got? Goolsbee, Bostic, Collins, Barkin, Cook. Well, I thought she was fired. Christopher Waller, And then Donald Trump will deliver the State of the Union, which will, which will probably have like a reality TV show, green room appearance of him before the thing. Look, I don't. He will likely say some outlandish stuff. That's not going to help, the uncertainty, which we've been talking about. But so I would not foresee this, turning around anytime soon. And anytime in the next sort of maybe 24 hours, for instance, and because it's just too much on the horizon. We've seen one of the Fed speakers overnight say that another rate cut is a coin flip in the US, which is in stark contrast to what the market's expecting. So yeah, plenty to be plenty to be wary of. Essentially, we are not that far from record highs, and all of these issues are enormous, and whilst they're having fairly large sector hits, essentially because that concentration risk is in the market cap and the way they pull the indices together. Nvidia and Apple being a very large chunk of and Google, Microsoft, and Meta being a very large chunk of the market. It's not really gonna show up until those guys start to fall. Yeah, I would be going through your portfolios, maybe ditching a few things that you're not really a believer in anymore, or you're thinking of getting rid of, because that cash will be very valuable in the event of some form of downside. So other companies, ARB, Monadelphous, Tyro 9, NextDC, Viva will report today. You'll have to have a look at the morning report to get some, to get a little summary of those. But yeah, overall, you can get an in-depth one on Woodside. Just check our socials. Sign up to Mosaic, scan the code. For those of you who listen regularly, you know the drill. Or just search MPC Markets on Apple App Store or Google Play, and you can sign up. And we will, if you're nice to us, we might even give you a little free trial as well. So you can just email us in. And we've got 4 recommendation services and very up-to-date news, 3 podcasts, etc. Have a great day, everyone. Stay safe out there, and make sure you approach the market a little bit mindful of broader risk, because it does feel we haven't had a major pullback since April last year, and it does feel a little bit shaky on a number of fronts at this point. So it is best to be a touch risk off rather than too bullish. But anyway, as I said, have a great day. We will speak again tomorrow.